Meta is a social media company that reaches across many different industries. To many of us, the company will always be Facebook, similar to how Chicagoans still call the Willis Tower the Sears Tower. They own Instagram, WhatsApp, and even Oculus Rift, the VR company. Today, the stock exploded 20% after the company reported better than expected results. Of course, Zuck had to sprinkle in a little bit about AI as well. Meta absolutely killed it in their revenues compared to previous quarter 4 of 2022. We can see that their revenues are up around 25%, which is truly impressive. When we look at these segments of revenue, we can see that advertising revenue experienced the greatest growth year over year. In addition, revenues from China grew substantially from $7.4 billion in 2022 to over $13 billion in 2023. A big reason why we saw such a strong move to the upside today was because of their income from operations. We can see that income from operations grew 62% as compared to 2022. Let me say that again, 62%. Something that we see in their 10K as a contingency is the recent legal action against Facebook for social media addiction in the youth. More specifically, how social media addiction can affect younger users' mental and physical health. This will be very important for the company as they are in a position to lead by example with millions of adults watching intently for the way they handle this situation. Now for some chart magic. We have covered many stocks with similar momentum such as SMCI and Costco. The downside may be limited after such an explosive move to the upside. If downside were to occur, a level investors would look to buy at is the 380 zone, which is a previous supply zone. If previous supply would turn into demand, that would be known as a break and retest. Another retest could occur around the $400 to $406 zone on the smaller time frames. Again, Meta stock may simply have too much momentum and keep rising to the upside indefinitely.